Hello traders. So the last fair value reference point we're going to be looking at is the order block. So today we're going to be defining what an order block is in price action. So what is an order block? So essentially, the order block, first of all, is categorized into two. We have the bullish order block and the bearish order block. So depending on your high time frame direction or your market direction based on your analysis, you can define either if it's a bullish order block or a bearish order block. So essentially a bearish order block is the last up close candle before a down move. For instance, in this example, we have this candle here which created the swing high. This is the last candle that had a bullish close before the market started dropping after creating this high. So actually this is a bearish order block, meaning that this order block, if retested or when retested, will likely send prices even lower. So this bearish order block is essentially the last up close candle in this swing before the market started dropping. So that is our order block. So I've outlined the opening price of this candle, but you can always start with the low of this candle is where you start defining the order block. So if the wick is too wide or too long, you might want to use the opening and the midpoint of the wick. But if it's a small wick like this one, you can use the opening because it will likely, once it retests, it will likely reach into the opening of the order block. So the bullish order block, on the other hand, is essentially just the opposite, but this one now sends prices higher into a bullish scenario. So the bullish order block is the last down close candle before an up move. So for instance, here we had this up move here. So this candle was the last down close candle before this market went higher here. So, and we have a swing low here. So this is the order block we'll be using. So it will likely be retested and then prices will find sensitivity and go higher. So this bullish order block, actually, as we have defined it, is the last down close candle before the up move. So in this instance, we are seeing that this swing here is being created, and this is the last down close candle. So this is a bullish order block, and it has an imbalance here. Okay, if I look up, so actually what makes these order blocks high probability is if you see an imbalance after the order block is created. So how do you know an order block has been formed? So this is our definition of the order block confirmation. So when you're bearish, so this is a bearish scenario. So when you're bearish, the bearish order block, so in this instance, we have this order block as a bearish order block, and I've outlined the opening of that candle. So there's no wick, so I've just outlined the opening of that candle. So this bearish order block actually was confirmed once the next candle, which is this one, closed below it. So we are seeing that the body of this candle came and closed below it. So sometimes we might have a wick close below it, which is still okay. Then we have an imbalance being left here. So actually this is a high probability order block because of the imbalance. So once this candle closed below the order block, it confirmed it. So once it is confirmed, and you have to actually consider that you are in a key turning point. It's just not any order block that you're coming to outline. This must be a key turning point. For instance, maybe this is a daily chart and you have a weekly imbalance here. So once that weekly imbalance was hit and the market created this order block, this becomes a relevant level to watch for market to come back and retest that level. And then you'll see, once it retests it, you'll see the market now dropping, confirming that that was indeed a bearish order block. So it will typically come back to revisit the bearish order block at a later point in time, but depending on the higher time frame direction. So if the higher time frame direction is showing us that the market will likely drop, then this order block, once it is retested, it will send the market even lower. So essentially, order blocks created in lower time frames, they're only significant when in line with higher time frame direction. So that's why I'm saying here that it depends on the higher time frame direction. So typically we have said that the order block will be retested once it is confirmed, and the market will retest it depending on the underlying market condition. But as I've outlined, not all order blocks are usually retested. And the reason being that, for example, if this is a daily chart and you have the weekly dropping, so if for example, if you say that these are order blocks, or rather one of these is an order block, since we have a swing and the last up close candle, so it might not necessarily be retested because the weekly is expanding and it's leaving imbalances, so it is aggressively moving lower. So the market might not find maybe that drive to come back all the way here because we're already expanding in the weekly chart. So these are the key levels that you should be watching when considering an order block as a reference point in price action. So the first thing you want to be watching is the opening price. So I like the opening price, especially when you don't have such a wick. So if you don't have wicks within the order block, if you're looking for the order block to be retested from, maybe this is a bullish order block. So once the market goes high, it might come back down to retest it. The first level you want to look at is the order block high, then the opening price, then the midpoint. So the midpoint is the last place you want to look for sensitivity. If the midpoint is broken below, the market will likely drop even more and probably even establish a downtrend. So those are the levels you want to be watching. And actually the midpoint is, again, just like the fair value gap, the most sensitive point in the order block. So if you don't have a wick like this one, you just want to watch the opening price. But if you have this wick, you can watch the midpoint first. If it is passed, you could come to the opening. But the midpoint of the body of the order block, right there, that is the last place you want to find sensitivity. So you can go into your charts and start identifying order blocks in price action, annotate them and journal, and also determine the key levels taught in this lesson in the order blocks and start identifying the price action behavior after they are hit and where you find sensitivity. Is it the opening, is it the low or high of the order block, or is it the midpoint? So thank you so much for watching. See you in the next lesson.